Hey, this is Clifton Stone with Memphis Cash Flow. I'm here with Greg Iverson with Neighborhood Loans. Wanted to just get Greg's take on a quick market update. I know we've had a lot of people are wondering what is going on with the lending market. A lot of questions surrounding that. So, Greg, if you could bring us up to speed on the current market as you see it relates to investors.
Yeah, of course. Yeah, Clifton, first off, thanks for having me. Obviously, it's something I'm passionate about. I think that at the end of the day, the financing of that investment has a huge impact on it, either which way. So I think it's super timely and important. Overall, it's interesting. So much talk has been on inflation recently. And at the end of the day, inflation being out of control has caused a lot of what we're seeing with interest rates climbing over time. So to give a little color to it, we started investment loans early this year. We started in probably about the mid 4% range. We saw them jump as high as about 7.5 or so. This is on a 30-year fixed rate in November. Now, the good news is there was a CPI index report, which is basically the inflation reading as we know it, that came out in November, showing that inflation is starting to fall, which is huge for us in our world. For mortgage bonds, that helps interest rates. And over the last month, since there was a reading that showed inflation is actually starting to fall, we've seen those interest rates improve by about a full percent, which is huge. Yes. This year it may not look like it, but 1% within a month is significant in either direction for mortgage rates. So,
and we've had a lot of purchases during that time.
It's been great, and I'll tell you what, it's a lot easier conversation for me to have, that's for sure. And the math, it makes that investment that much more attractive at the end of the day. So as far as what's coming, as these announcements continue to come out, assuming that we do get a grasp on inflation and that continues to fall, I believe first, second quarter next year on throughout the year, I do think we'll see some continued improvement in mortgage rates. Specifically in investment mortgage rates, I do think that we'll see some improvement there. I don't think it'll be drastic. If I were to predict, I think we're probably going to fall into the high 5, low 6 range and probably live in that world for quite a while, which is okay. That's more of a normal market at the end of the day.
So you think we're settling in? We're going to find what's the new normal here?
If I were to go with what my gut tells me today, we are at more of the new normal. Yeah, I think that the highest rates are behind us. At the same time, I don't think we're going to see what we saw in COVID where the bottom just falls out. I think we're going to live in that world for the next several years, somewhere in that range.
The foundation is so stable, absolutely, in the real estate market.
Exactly.
I have a lot of investors ask me this, and I'm curious to hear your response. When we hear about the Fed has increased the rate by 0.5 point, like we just saw,
yes,
how does that translate? How does that affect the rate that we see from a lender like you?
Yeah, it's a great question, and it's probably the most common one that we get, quite honestly. And I think at the same time, it's probably the most misunderstood bit of information and how it relates to mortgage rates. So at the end of the day, what they are adjusting, what the Fed is adjusting is the federal funds rate. That has an impact far more on commercial borrowing, on like home equity lines of credit, for instance, auto loans, commercial real estate loans, things like that. Are much more affected by banks borrowing costs at the end of the day, like that. So, when we hear an announcement like that, that doesn't mean that mortgage rates went up 0.5%, went down 0.5%, that sort of thing. There's not necessarily a direct correlation at all to it. At this point, it's much more on, the inflation reading. That's what's had such a big effect on mortgage bonds. So, while I think what the Fed is doing is starting to get things under control in the overall economy, and that is causing mortgage rates to fall, I wouldn't pay as much attention to when they make those announcements, which I think we'll continue to see in the new year, continuing to jump that rate up a little bit. When you see that, keep in mind that is independent of mortgage rates. Even if we see that continue to go up, there's a a very good chance that rates could continue this way or even start to head down. So,
wow, that's interesting. So even though we expect to see continued rate hikes, likely of a half a point coming in the future, we can almost expect interest rates to remain where they are.
Yeah, definitely. And I firmly believe that. And, it's interesting. I talked to a bank that we do some commercial borrowing with just yesterday, I think that was, and he gave me some color to it that's very interesting. They're starting to price their commercial loans somewhere in the 7.5% range or so. And that's what's being affected with each of those jumps. That is the rate that's actually going up right now. Well, mortgage rates are not tracking with that. It's a great question because naturally when people hear that rates are, climbing, they hear that in the news, they assume it directly translates mortgage rates are climbing as well. Fortunately, that's not the case. So again, that's why I think we'll continue to see them probably go in this range and potentially even fall into early 2023, even while the Fed does more than likely have some smaller interest rate increases, Fed funds rate increases. Over the
I
next
certainly hope you're right.
So do I. So do I. Now, that being said, the disclaimer, I am not an economist, but that is the mortgage data that we receive, it definitely paints the picture of, more stable rates to potentially falling.
Yeah. Any of you out there want to have a conversation with Greg? They have a great team in place. Look up Greg Iverson with Neighborhood Loans and reach out to them. A lot of I learned very early on that your most important team member in this business is your lender. And they can offer, especially for new investors just starting out, working on building that foundation of your portfolio with your first 10 properties. The advice that you get from your lender, and I learned a few things the hard way in this, the advice you get from your lender can really help pave the road, all the way to your 10th property.
Agreed. Yeah, the success of the portfolio, I think a lot of that, the financing could be the cornerstone, just like the turnkey company. So, Clifton, thanks again, man. I really appreciate it.
Yeah, thank you, Greg.
All right, take care.
You too.